Hey, Zachy Crypto fan, welcome back to another episode of Zachy Crypto Update, your go-to channel for all things crypto. Today, we're diving deep into a topic that's been on everyone's radar: why XRP price crash precedes rally to $1. If you've been keeping an eye on the market lately, you might have noticed some turbulence with XRP, and you're not alone. XRP has been under significant pressure recently, pulling back below the $0.60 mark. But don't be fooled by this drop. In today's episode, we're going to explore why this might actually be a golden opportunity to buy the dip. We'll dig into the data, break down the latest whale activity, and uncover why these market moves could signal an impending rally towards $1. So whether you're an XRP holder or just crypto curious, stay tuned because this is a breakdown you won't want to miss. Let's start by looking at the broader market context. As of today, XRP is down nearly 3%. And this decline isn't happening in isolation. The entire crypto market is experiencing a bit of a shakeup, with heavyweights like Bitcoin, BTC, and Ethereum ETH also struggling to maintain key support levels. For XRP, this recent pullback is part of a larger trend we've been observing over the past week. The price has declined by approximately 2.2% in the last 24 hours alone, pushing the weekly loss to around 2.8%. But here's where it gets interesting. Despite this short-term bearish trend, Ripple seems to be signaling a long-term bullish trajectory. One of the key indicators we're looking at is whale activity. Whales in the crypto world are entities or individuals who hold large amounts of a particular cryptocurrency and have the power to influence market trends. Over the past few weeks, we've seen a significant spike in whale accumulation of XRP. This raises the question, what do these big players know that the rest of the market doesn't? Let's break this down further. Recently, Whale, a well-known blockchain tracking platform, reported a massive transfer of 94,325,384 XRP from one unknown wallet to another. This kind of movement often catches the eye of investors, sparking discussions and speculations about what might be happening behind the scenes. Now, if this whale intends to offload these XRP tokens or diversify into other digital assets, it could potentially dampen the bullish momentum and even trigger another wave of sell-offs. However, there's another way to interpret this move. Some analysts believe that this transfer could be a strategic play to create temporary downward pressure on the price, shaking out weaker hands before a substantial rally. In this scenario, whales might be taking advantage of lower prices to accumulate more XRP, betting on an upcoming surge. It's a classic example of how the crypto market can be a battlefield of psychological games. To put things into perspective, this isn't just a speculative theory. Despite the recent price drop, we've seen some major developments that indicate growing confidence in XRP, especially among institutional players. Speaking of institutions, let's talk about Ripple's expanding influence in the global financial system. One of the most significant aspects of Ripple's business model is its ability to provide fast, cost-effective cross-border payment solutions. Ripple's payment network has been steadily gaining traction, particularly among major banks looking to reduce costs, speed up transactions, and access new markets. According to recent reports, several global banks have begun integrating Ripple's XRP Ledger XRPL technology into their operations. Among these are prominent institutions like the Agricultural Bank of China, Bank of Beijing, and Standard Chartered Bank. This is no small feat. It highlights the growing trust in Ripple's technology as a backbone for international financial transactions. Even more interesting is the involvement of Bank of America. Despite previous doubts and the regulatory challenges facing Ripple in the United States, Bank of America has been collaborating with Ripple since 2018. This long-standing partnership underscores Ripple's ability to offer robust financial services even in the face of adversity. Let's not forget the broader implications of these partnerships. As more banks and financial institutions adopt Ripple's technology, the demand for XRP is likely to increase. This increased demand could, in turn, drive up the price of XRP, especially if supply on exchanges continues to decrease. Now, let's talk about supply dynamics. One critical metric that often gets overlooked is the supply of XRP on exchanges. As of August 27, this supply fell below the 3 million mark, holding steady at 2.64 million. This might seem like just another number, but it's a crucial indicator of market sentiment. When the supply of a cryptocurrency on exchanges decreases, it often suggests that investors are holding on to their assets rather than selling them. This behavior is generally seen as a bullish sign, indicating confidence in the future appreciation of the asset's price. In the case of XRP, this decreasing supply aligns with the whale accumulation trend we discussed earlier. Large volume investors or whales currently hold around 3.88 billion XRP, a significant increase from their holdings in early August. This data suggests that despite the recent price dip, major players are betting on a price rally in the near future. But what does this mean for the average investor? Should you be following the whale's lead and buying the dip? Or is there still reason to be cautious? Let's dive into some technical analysis to answer those questions. As of the latest data, XRP was hovering around $0.5728 during the US trading session. The technical charts show that the 50-day exponential moving average EMA is providing immediate support on the downside, while the 20-day EMA is acting as a resistance level at around $0.582. What does this mean in layman's terms? If XRP can close above this 20-day resistance level on a daily basis, it would reinforce a short-term bullish outlook. This could set the stage for a classic technical pattern known as the inverse head and shoulders HS. For those new to technical analysis, an inverse HS pattern is typically a bullish indicator that suggests a trend reversal and potential price increase. If this pattern holds, we could see XRP's price surge by as much as 21.6%, reaching around $0.74. This breakout target is calculated by measuring the height of the HS pattern and projecting it above the breakout point. However, technical analysis is just one piece of the puzzle. Markets are influenced by a variety of factors, and while the charts might be pointing to a bullish breakout, there are still risks to consider. It's crucial to approach any investment with a balanced perspective, and that means being aware of potential risks. One of the most significant risks for XRP is the possibility of further price declines if key support levels fail to hold. Specifically, if the 50-day EMA support at $0.5661 crumbles, we could see a continuation of the downtrend. In that case, the 200-day EMA at $0.5487 could come into play as the next major support level. But if the selling pressure intensifies, we might not be able to rule out a drop to $0.50 or even as low as $0.40. For long-term investors, these are encouraging signs. However, it's important to have a clear strategy in place. Whether you're thinking of buying the dip or holding onto your current XRP stash, make sure your decisions are based on thorough research and align with your overall investment goals. And remember, while the potential for a rally to $1 is exciting, the crypto market is notoriously volatile. Always be prepared for the possibility of divergent outcomes. Before we wrap up, a quick disclaimer: the information provided in this video is for educational and informational purposes only. It is not financial advice, and you should not take it as such. The cryptocurrency market is highly volatile, and investing in crypto assets involves a significant amount of risk. Always do your own research, consider your financial situation, and consult with a qualified financial advisor before making any investment decisions. XRP Crypto Update is not responsible for any financial losses you may incur as a result of trading or investing in cryptocurrencies. So there you have it, folks, a deep dive into why XRP's recent price crash might actually precede a rally to $1. Despite the current market jitters, there are strong indicators that suggest XRP could be gearing up for a significant breakout. But as always, proceed with caution, stay informed, and make sure your investment decisions align with your financial goals. If you found this video helpful, make sure to smash that like button, subscribe to the channel, and ring the bell so you don't miss any updates. Let me know in the comments what you think about XRP's future. Are you bullish or bearish? And as always, thanks for tuning in to XRP Crypto Update. Stay safe and happy investing.